بسم الله الرحمن الرحيم. My dear students of 4th year English section, السلام عليكم ورحمة الله وبركاته. احنا اتفقنا يوم الاثنين ان بيبقى عندنا ساعة ونص في الكورس Accounting System as a lecture face to face، وبيبقى في عندي face to face lecture through Zoom. We began with chapter 2 in course Accounting, an introduction to cost terms and purposes. About half of this chapter is explained. I will re-explain very quickly for the first 13 or 14 slides. Then the remaining I will explain to you, because I have to begin with process cost accounting system on Monday, inshallah. Regarding introduction to cost terms and purpose, this Zoom lecture will be available after 1 hour or 2 hours today, with the managerial accounting Zoom lecture also on my site. Today may be somewhat late, but tomorrow morning for sure they will be on my site. At the same time, I will give these 2 lectures to the IT of the college to upload them on the college or university site. Regarding cost and cost terminology, we said that cost is a resource sacrificed or forgone to achieve a specific objective. So I can pay some money to get a trouser. So the trouser is a specific objective I need to fulfill. At the same time, I sacrifice my money with me to get this t-shirt or trouser. That's why when a company purchases raw material, it's sacrificed by the money she has or it has to get the raw material for producing a certain product. Actual cost is different from predetermined cost. So actual cost is the cost incurred. Historical cost happened, I paid already, as distinguished from budgeted cost. Why I have budgeted cost? Because the main aim of cost accounting is measuring cost and controlling cost. Measuring cost, that's why last year, while you are in 3rd year, we prepared what is called the cost sheet and income statement. This is how to measure cost. But how to control cost, I have to compare between actual cost and the predetermined cost, actual cost and budgeted cost. Because if the budget cost is 10 and the actual is 11, why it is 11? There is unfavorable variance of 1. So I have to punish the one who fulfilled or who caused this unfavorable variance. Suppose that cost, the budget cost is 10, and I performed what is required, but with 9 costs only. So 9 instead of 10, so I saved 1. This saving, I have to give incentives to you, and so on. A cost object, I told you in managerial accounting also, that the cost object is the something for which I am measuring its cost. The cost object is anything for which a separate measurement of cost is desired. Regarding allocation, I told you that there is direct cost of the departments. For example, assembly department has its own direct cost 75,000. The finish department has its own direct cost 55,000. But both departments needs maintenance. The maintenance department has a cost of 40,000. How to allocate the 40,000 to the 2 production department, assembly and finishing? I may allocate equally. So 20 for assembly department, 20 for finishing department. Or I may allocate according to a ratio, a certain ratio. I may tell you, allocate the 40 as 3 to 1. 3 to 1, total parts 3 plus 1 equal 4. 40 divided 4 gives 10. 10 times 3, 30,000. 10 times 1, 10,000. I may tell you the cost driver is the direct cost of the 2 departments. So I may add the 2 departments' cost together. 130,000. Then I will divide the 40 by the 130,000, and the resulting rate will be multiplied by 75 and by 55. Assume that maintenance department costs are allocated equally among the production departments, I mean the assembly and the finishing. How much is allocated? As I will allocate equally, so the 40 will be 20 and 20. So 20,000 and 20,000. If I allocate using other method instead of equally, so I have to allocate according to the method or the rate he is giving to me. Cost behavior pattern example. He said that bicycles by the sea buys a handlebar at $52 for each of its bikes or bicycles. What is the total handlebar cost when 1,000 bicycles are assembled? إذا لما يجي يجمع 1000 bicycle, كل bicycle or each bike needs a handlebar. The handlebar is $52. So 1,000 times 52 gives $52,000. If I will assemble 2,000 times 52, it will be 104,000. This means that this is variable cost that is very in total, but will be fixed per unit, like this. By the sea, when making 1,000 times 52 gives 52,000. If 2,000 times 52 gives 14. Suppose that 3,000 will be 156. It is a variable cost. At 1,000, 52,000. 2,000, 104,000. 3,000, 156,000. This is variable cost. But at all levels, the cost per unit is 52. So this is variable cost. He told me now, bike by the sea incurred 94,500 in a given year for the leasing of its plant. So the rent paid per year, 94,500. This is an example of fixed cost, rent, with respect to the number of bikes assembled. So if I assembled 1,000, 2,000, 3,000 up till the full capacity, I will not pay more than 94,000. Not more and not less than 94,500. So this is fixed cost in total. If divided by 1,000 or by 2,000 or by 3,000, the per unit cost will be different. So fixed cost is fixed in total, but variable per unit. The cost driver of variable cost is the level of activity or volume whose change causes the variable cost to change proportionally. I told you before that if I give each student a notebook and a pencil, which equals 10 pounds. So if one student only came to the lecture, so 10 pounds. 2 students, 20 pounds. 100 students, so 100 times 10, 1,000 pounds. This is variable cost, variable in total, but fixed per unit. What is the cost driver here? The students. Suppose that I am producing a certain product, glasses, for example. If I produce one glass and its variable cost will be 10, 2 glasses will be 20, 200 glasses will be 2,000. The cost increase with the number of glasses and decrease with the number of glasses. So the glasses is the cost driver through which the cost or the variable cost proportionally change. The number of bikes assembled is the cost driver of the cost handlebar. As handlebar is $52, so if I produce 1,000, I will pay 52,000. 2,000 bike, 104,000. So the something that moves cost to be up and down is the bikes, the number of bikes. So the number of bikes is the cost driver. Relevant range, I told you that suppose that the 94,500 as fixed cost will be paid from 1,000 bike production to 5,000 bike production. So before the 1,000, I don't know how much fixed cost. After 5,000, I don't know how much fixed cost. But within the 1,000, 5,000 as a range, I'm sure that fixed cost will be 94,500. This is called a relevant range. Relation of types of cost. I have direct cost and indirect cost. Direct cost you can determine easily in the product itself, but the indirect cost you can determine easily. At the same time, all direct costs are variable, but not all variable are direct cost. Why? Because as you see, the direct cost is variable, but the indirect cost, some of it is variable and the other part is fixed. So all the direct is variable, but not all the variable are direct, because some are direct and some indirect. Interpret unit cost cautiously. I told you why you have to interpret it cautiously, and we got an example. When he divided the total cost of producing 1,000 bike, and we find that each bike has 146.5, I think, as cost per bike. 52 for the handlebar, variable cost, and the 94,500 divided 1,000 gives 94.5 or 94.5, yes. 94.5 plus 52, it gives 162 or 152. I'm not remembering well, but in general, can I use this unit cost to produce 2,000 units? So 2,000 times 146.5? No, I can't. Why? Because the 94,500 fixed cost was divided or allocated on 1,000 units. Now, the same cost of fixed cost, that is 94,500, should be allocated to 2,000 or 3,000. So I can't use the per unit cost of a certain level to predict another level. That's why I have to interpret unit cost cautiously, because it will be misleading. Okay, distinguish among manufacturing companies. I said that there is merchandising companies, there is manufacturing companies, there is service sector companies. What is the difference between each? The manufacturing companies purchase raw material, convert the raw material to finished products, then sell these finished products. While converting the raw material to finished product, I may have an intermediate level, that is work process. So the raw material, if I will manufacture it 50%, so it will be work in process. I completed the other 50%, it became finished product. That's why if I'm determining the kinds of inventory regarding the manufacturing companies, I have raw material inventory, I have work in process inventory, and I have finished product inventory. Regarding the merchandising companies, these companies purchase the products and sell it as it is. So there is no manufacturing processes, but he sells what he purchased. That's why he has only finished product inventory. He has no raw material because it does not manufacture or produce the product, and has no job work in process as there is no manufacturing. So just one kind of inventory. Regarding the service sector, as a tourism company, the tourism company renders services. So it needs raw material, it needs no work in process, it has no finished products, but it renders services, so has not any kind of inventory. Manufacturing companies purchase materials and components and convert them into finished products. A manufacturing company must also develop, design, market, and distribute its products. Okay, merchandising company purchase, then sell tangible products without changing their basic form. So purchase the product and sells these products at its form without changing this form. Regarding service companies, provide services, render services or intangible products, I mean services also, to their customers. Labor is the most significant cost category. That is regarding service companies. Labor is the most significant cost category because rendering services needs labor cost need wages to render these services to our customers. Differentiate between inventoriable cost and period cost. From this slide, you have to concentrate well because this is something we are explaining for the first time till the end of these slides. When I'm saying period cost, these costs relate to the period. So just the period is finished, so the cost must be paid as rent. يا ولاد لو قلت انا ساكن في شقه ايجار وفتره الشهر دي المفروض ادفع فيها 3000 جنيه. طيب افترض ان في الشهر دوت رحت اصيف. هاجي اقول للراجل اللي مأجر لي انا مش هدفع عشان ما كنتش في الشقه، ولا جاست ان المده عدت 1 مانث عدى يبقى لازم ادفع الرنت؟ يبقى دي بنسميها period cost. I have to pay either I produced or not. I produced with full capacity or I produced with zero capacity. So period cost is fixed cost. And we cannot consider this cost in the production itself, but we deal with it separately. Just like administrative cost last year when we were excluding from the gross profit to our gross income to get the net income before tax. What about inventoriable cost? That the cost of item of cost that used in production. This means all the costs included in the product are considered production cost because the inventory after production may be put in the stores and may be sold. So I have to calculate COGS. So inventoriable cost, production cost included in the inventory. So all the cost of production up till I arrive to the finished product and put it as inventory in the store represent inventoriable cost, and I call it current asset. So it appears in the balance sheet, asset side, inventory at end. But when I sell this inventory, it will not be in the balance sheet, but it will be in the income statement as we say that it is a COGS now. After that, types of inventory, manufacturing sector companies, شركات الصناعية, typically have one or more of the following 3 types of inventories. It has direct material inventory. Yes, because it purchased direct material to convert them to work in process, then finished goods inventory. So I have 3 kinds: direct material inventory, work in process inventory, or sometimes we call it work in progress, then finished goods inventory. What about types of inventory? Regarding merchandising sector companies, they hold only one type of inventory, the product in its original purchase form. So I purchased the chair. I will sell the chair as it is. So I have just one kind of inventory, that is the finished product I am selling to the customers. Service sector companies do not hold raw material or work in process or progress or finished product because these tangible products it has nothing to do with because it renders services. Classification of manufacturing cost. Manufacturing cost may be direct material cost. I purchased raw material. Then direct manufacturing labor cost. There are some laborers will convert these raw materials to a product. At the same time, they cannot convert this raw material to finished product without the help of machines. For example, these machines have depreciation. So I have to calculate depreciation. This is indirect manufacturing cost. For these machines to work, we need electricity. So electricity cost should be considered as indirect manufacturing cost. These machines needs maintenance. So maintenance is considered indirect manufacturing cost. So I have direct material, direct labor cost, that is wages. Then I have indirect manufacturing cost. These are classification of manufacturing cost. Describe the 3 categories of inventories commonly found in manufacturing companies. We describe them. What about inventoriable cost? Inventoriable cost. I have inventoriable cost to be considered as assets. I told you after producing the product, it will be inventory in the stores, so we cannot consider it COGS, but we put it in the asset side as current asset. But when I will sell this inventory, so I will take it from the stores to give it to the buyer, and this means that when I sell these goods for 100 pounds, for example, these goods is converted to be COGS, to be compared with sales price to get gross income. Then inventoriable cost is considered assets. When we sell these assets or this inventory, it becomes cost of goods sold. After sale takes place, so we will get our operating income. What about period cost? We explained it, but we are explaining again. Period costs are all costs in the income statement other than COGS. So COGS, cost of goods sold, that is cost of production plus marketing cost. So the inventory, after producing this inventory, we consider current asset. When we will sell it, we add to its cost the selling cost, the marketing cost, to be converted to COGS. So what is the cost that we didn't add? I have manufacturing cost and marketing cost. We consider them COGS because the content of COGS is manufacturing cost and marketing cost. The remaining is administrative cost. So the administrative cost, we consider period cost. That's why we record this one in the accounting period records in which they are incurred. So period costs are recorded as expenses of the accounting period in which they are incurred, but it is the cost rather than COGS. So COGS to be deducted first to get gross income. Then when we deduct the period cost, that is the administrative cost in general, we get net income before tax. Flow of cost example. Try to concentrate with me, please. Bike by sea had 50,000 of direct materials inventory at the beginning of the period, and purchase during the period amounted to 180,000 and ending inventory equal 30,000. How much direct materials were used? Now, I was having 50,000 at beginning, and I add to them what I purchased 180. So the available material I can use 50 plus 180 equal to 130. The remaining ending inventory 30. So what is used is 200,000. So beginning raw material inventory plus purchased material minus ending gives the materials used. Again, I was having 50,000 direct material at beginning. I have them at the beginning of the period. Through the period, I purchased 180. So having 50 plus purchase 180, so the available to use 230. When I find at the end of the period that I have $30,000 unused material, so they are ending inventory. So 50 plus 180 gives 230. The remaining is 30, so the used will be 200. Okay? So the materials used 200. Direct labor costs incurred were 105,500. Indirect manufacturing costs were 194,500. Now, what is the total manufacturing cost? Total manufacturing cost means direct material, direct labor plus indirect manufacturing cost. Direct material, we calculated it now, 200,000. We add to it direct labor, 105,500, and indirect manufacturing cost, 194,500. The total is 500,000 total manufacturing cost during the period. Total manufacturing cost during the period. I may have work in process at beginning. I have to add. I may have work in process at end, I have to deduct. I may have finished the product at beginning, it must be added. I may have ending finished product, I have to deduct. And if you remember, through third year cost accounting, when preparing the cost statement, I told you that direct material, direct wages, indirect manufacturing cost. The total is total manufacturing cost during the period, plus beginning work in process minus ending work in process. I get total manufacturing cost of completed units during the period. Then plus beginning finished product. So I have the total manufacturing cost of produced units available for sale. Available for sale. When deducting ending, I tell you this is COGS. So raw material, direct wages, plus indirect manufacturing cost, total manufacturing cost during the period. Try to review the lectures of last year. Then adding beginning and deducting ending work in process, I get total manufacturing cost of completed units or units produced during the period. Adding beginning finished product, I will get available for sale. Deducting ending, I will get COGS. Now I have total manufacturing cost during the period 500,000. Assume that the work in process inventory is at beginning is 30, at end is 35. So beginning work in process 30, I will add to 500, it gives 530. I will deduct the ending 35 to give cost of goods manufactured, wholly manufactured, because the work in process at beginning, I completed it. What is remained as work in process at end, I deducted it. So this is cost of goods manufacturing during the period. Now, assume that finished goods inventory at the beginning of the period was 10,000. If adding 10,000 to the 495, I will get available for sale. If deducting the ending, I will get COGS. Now, he add the beginning and deducted the ending and gives one title. Even though I told you, when did adding the 10,000, I will get a title here called completed units, manufacturing cost of completed units available for sale. But when deducting ending finished goods, I will get cost of goods sold. Okay? Anyhow, it doesn't matter that he forgot to give a title before the ending finished product. But if you review the lectures of third year regarding cost sheet and income statement, through the three methods, I'm telling you again to remember, the full absorption, the variable costing, the utilized capacity. In the three, I was adding beginning work in process and deducting ending work in process. Adding beginning finished products and deducting ending finished products. Flow of cost example. Beginning balance 30,000 in the work in process, plus direct material 200, plus direct labor 105, 500, indirect manufacturing 194, 500, and I have ending balance of work in process 35. That's why I got 495. That is the result after completing the work in process. This figure, you can look with me, please. This is 495. From where I got this figure, 30,000 at beginning work in process, 35,000 to be deducted at end work in process, and the 500 represents the cost during the period. That is the cost during the period. Direct material, direct labor, and indirect manufacturing cost. These 500 or these three items, 200, 105, 500 and 194, 500. These are the three items here. Direct material use, 200. Direct labor, 105, 500. Indirect manufacturing, 194, 500. The total is 500,000 plus 30 beginning minus 35 ending. It gives 495,000. That is the completed units. The completed units, that is appeared here, 495, the completed cost of goods manufactured or completed. When adding beginning and deducting ending regarding finished products as like this, so the finished product, the work in process gives 495,000 to the finished goods account, at which I added the 10,000 at beginning. He explained to me 10,000 at beginning, 15,000 at end. This is the 10,000 added to the 495 and the 15 deducted. Through the accounts, there is 10,000 beginning, 15,000 to be deducted. So the total 490 is finished and completed goods that I will sell. As I will sell, it came to the COGS account, as I will tell you in job order costing and the cost control accounts after 2 or 3 lectures, inshallah. Now, manufacturing company, this is the balance sheet and this is the income statement in the manufacturing company. Inventoriable cost, that is material inventory, yes. Then we add work in process, right? To get finished goods inventory, right? The finished goods inventory will appear in the balance sheet. So I have 3 items of inventory in the balance sheet. Material inventory, current asset. Work in process inventory, current asset. Finished goods inventory, current asset. And this one gives work in process. The work in process after finishing gives finished goods inventory, but all are in the balance sheet. When I will sell, can I sell work in process? No. Material inventory? No. But I sell always products, finished goods inventory. When I sell it, so it will be converted to COGS. When sales occur, the finished goods inventory is to be converted to cost of goods sold, COGS. If deducted from revenue, I will get gross income. If I will deduct the period cost, administrative cost equals operating income. Again, in the balance sheet, I have in the manufacturing company, in the balance sheet, I have 3 kinds of inventory. Material inventory, work in process inventory, finished goods inventory. The material, I add to it wages and the manufacturing cost, indirect manufacturing cost, and work in process at beginning minus work in process at end. I add finished goods inventory at beginning and I deduct at end to get the finished goods inventory in the stores. If I will sell this finished goods inventory, so it is converted to COGS in the income statement. COGS, if deducted from revenues, so I will get gross income or gross margin. If deducting period cost as administrative cost, I get operating income. So this is the part of balance sheet, and the finished goods that is converted to COGS in the income statement to be deducted from revenue, then I will get gross margin, deduct period cost, I will get operating income. Now, merchandising company. The balance sheet has merchandise purchase as inventory. So the inventoriable cost is merchandise purchased. I have no manufacturing. It is inventory in the balance sheet. When I sell it, it will be COGS in the income statement. Deducted from revenue, it gives gross margin minus period cost gives operating income. So here I have just one inventory. The products at the form I purchased it as inventory in the balance sheet. When I sell it, it will be COGS like the manufacturing companies. Regarding service companies, it has no inventory. What is meant by prime cost? If you remember last year, I told you I have 3 main kinds of manufacturing cost. Direct material, direct labor, and manufacturing overhead, right? Again, I have direct material, I have direct wages or direct labor cost, then I have manufacturing overhead. If I will begin by the total of direct material and direct labor, it is called prime cost. Prime cost. I have another cost called, yes, prime cost, as I told you, the direct material plus direct labor. What about the conversion cost? direct labor plus manufacturing overhead means conversion cost. So if I have the three kinds, I will tell you how now. I will add a new slide. Suppose here that I have direct material plus direct material, one moment, plus direct labor plus indirect manufacturing costs. So I have three items now, and they are indicating the manufacturing cost: direct material, direct labor, and indirect manufacturing cost. If I will let it out, the indirect manufacturing cost, I haven't indirect manufacturing cost. So the direct material plus direct labor means prime cost. Prime cost. Now, suppose that I take the direct material away and I have direct labor and indirect manufacturing cost. The two costs, direct labor and indirect manufacturing cost, convert the direct material to be finished product. That's why these two items, we call them conversion cost. So direct labor, if added to the material, cost, the direct material, both of them we call prime cost. But if it is added to indirect manufacturing cost, this cost is called conversion cost. Why we call it conversion cost? Because direct labor and indirect manufacturing cost that convert direct material to be converted to finished product. Again, we are not in need of this slide now. We can delete it. I have prime cost. Prime cost means direct material and direct labor only. So they are prime cost. If I will add the 200,000 of the bike company or manufacturing firm with the direct labor 105,500, I get 305. This is called the prime cost, direct material and direct labor. But if I will add direct labor with manufacturing overhead, so these two items of cost we call the conversion cost. Why we are calling conversion cost? Because these are the two items that convert the direct material to finished product. By this, I finished my lecture. This is direct labor and indirect manufacturing cost 300. I finished this lecture with you. I hope that you understood it well. Please, this lecture with the managerial Zoom lecture will be on the site either today, but about 11 o'clock, or tomorrow morning. So the two lectures you have to study well before Monday. Because if you have any question regarding the two lectures, okay, ask me before beginning in the new subject in managerial, the new lesson in managerial and cost accounting system. If there is no questions, I will begin explaining the new lectures directly. Please study them well and ask me if there is any question. They will be on my site today evening, or today night, or tomorrow morning, and I will give the two lectures, Zoom lectures, to the IT tomorrow to upload them on the faculty or university site to be available in two sites, my own site and the faculty or university site. Thank you very much and see you on Monday, inshallah. Shukran. Salaam alaikum.